Hello investors and traders. So today Adobe stock is falling about 20% down. The digital media and marketing software firm also released its quarter report. It was quite weak. Also it announced a deal to acquire Figma. It's a web-first collaborative design platform, and the deal amount will be 20 billion. Earlier this week, two Wall Street firms downgraded Adobe stock ahead of the company's earning report. Mizuho Securities lowered its rating on Adobe to neutral from buy on Monday, and also BMO Capital Markets downgraded Adobe to market perform or neutral from outperform or buy. Thus, firms noted difficult sales climate for Adobe, and also survey results and sales channel feedback showing a weakness in Adobe's Creative Cloud business. So let's check the chart of Adobe. Let's have a look on the weekly time frame. We can see if we'll check the Elliott waves. In my mind, yeah, here it was the first wave, the second, here the third wave, usually the longest wave in the impulse is finished, and now we are in correction, and so the correctional wave is the first one. And let's have a look on this. Here we have a support level 262. So using the Fibonacci levels, we can see that here there is a nice level, the FIBO level 62%. So most probably there is a high probability that we will see the stock even lower in the future weeks. So this support level 226 is I think is very probable to see the stock, and in this case we are going to fail another, let me check 1 minute, another 10% down. So it's my focus for this stock, it's my target for the future weeks. Let's look at the chart a little bit closer. We can see that these levels, the stock showed that the COVID crisis, and now it's the last half of year. Its performance very poor. From the beginning of the year, Adobe is down more than 45%. So very poor performance we can see at this year. Also, let's have a look on the PS ratio, price per share. We can see that here it's about a 9, but it's not, I can't say that it's cheap. So in my mind it's still very expensive. I would like to see the stock, it's about 5-6, and then it will be very good levels to buy. And let's have a look on these fundamental parameters. We can see any problems with that, debt to EBITDA ratio less than 1, high marginality, the company growth is about 80, net margin about 30%, very high levels. The revenue, the EBITDA, EPS in the past showed a very impressive growth, and the future forecast of the analysts also it's very impressive, it's double digits. And the RSI, the momentum indicator on the weekly time frame, is now showing that already oversold, but I think we can see in this stock to another move down about 10 to 15%. So from the marginality, the performance, the revenue, the EBITDA, it's quite good, quite clear, but simply it's the value of the stock, it's very expensive. That's why it's now in a correction. So maybe if in the future weeks it will be a very good opportunity to buy this stock. In my channel I have a lot of videos about stock analysis, dividend stocks, so if you like this video, don't forget to subscribe, and see you until the next time. Bye.